Hey guys, it's Ray Campbell, Fairway Independent Mortgage. It is Monday, Thanksgiving week. Wanted to give you a quick market update for you, let you know kind of what's been going on. I know it's been a little while. It was really more the same conversations over and over and over again. Nothing was really changing on us. Nobody really had any answers on what was going on or when it was going to change or anything like that. So we are starting to see that happen now, where we are seeing some changes in the interest rates. They are starting to come down. It's been a little bit now, so not one of the head fakes like we've had, where interest rates may have come down for a day or sometimes it was a few hours, and they started to come down a little bit, but then turn immediately and go right back up. So they're coming down. We are starting to see some of those signs in the market that this is going to be maybe a turn for us, and hopefully we've seen the peak. It looks that way. And right now you can start seeing interest rates that might be in the high sixes, depending on, of course, how many points you want to pay for it. But for the most part, we're, mid sevens or so, for interest rates. You can get that without paying points, or depending on, credit scores. We're getting away from the eights, where, maybe a lower credit score or something like that would put them in the 8% or mid 8% range or something like that. So we're starting to see that all come down, and the margins start to kind of fix themselves. So, the spread between maybe a 720 and a 700 credit score isn't 0.5% anymore, something crazy. We're starting to come back to a little bit more of what, quote unquote, normal is. So that's a good thing. Now, where we're going from here, something to consider as you're doing end of year planning and, how you want to kind of market and have the conversations with your people is, interest rates ideally will start to come down even more. However, we might not see a big move until maybe March or May. So the reason for that, of course, is we need to have certain economic things happen. We need to see the Fed do or not do a couple of things, but ideally what we're going to see in March or maybe into May is that the Federal Reserve may possibly start cutting or consider cutting or talking about maybe, having to do that. But the biggest thing is going to be if they decide or mention that they're going to pause or stop their, where they're letting the mortgage-backed securities and treasuries roll off the balance sheet, which is what is actually, that part of it was making mortgage rates go up. So we may see interest rates kind of trickle down a little bit here and there between now and March or May timeframe. I say middle of March when the Fed meetings are, and then May 1st. So that's what we're kind of looking at, that time frame of when we could really start to see a big change in interest rates, where they start to come down, and they start to come down in a significant way. But right now, like I said, mid sevens isn't bad. It's much better than 8.5, right? So that's where we're at. It looks like we're going to kind of go into the end of the year where that's going to start to hopefully trickle down a little bit. It'll bounce up and down a little bit here and there, but that's what we're starting to see. So if you have any questions on anything, you need anything this week, let us know. You can always reach me on my cell phone. I know it's Thanksgiving week. I hope everybody is enjoying their friends and family this week and has a great Thanksgiving. But if you do need something this week, let me know. Give me a call, shoot me a text. Be happy to help. And we'll talk to you guys again next week. Take care.